Hello, so this is a video for those who are going to be using or trying to understand the Parallax Market Report. I get this report probably Sunday night or Monday morning, depending on when it's issued. And what it really is a summary of most of the widely used Parallax financial research technology. In the email basic report, the first part of this really just summarizes any key large scale events that are happening. There's two events that are primary that we monitor. One is called a compression event and one is called a extension event. Compression events are denoted by these blue diamonds, and what these diamonds indicate is that a new trend should start or should commence very shortly after they've been triggered. Right now we're seeing it in the S&P 500, OEX 100, and some other key indices. You can see previously from these blue dots that very large scale elongated trends have emerged from these points. The opposite of these signals is called an extension event. These are denoted by the fuchsia triangles, like we're seeing here in the coal market, and we're also seeing in crude oil, which is a little bit further down. Here's a euro currency, here's the dollar. And what these signals denote is that the current trend should stop at this point. So the dollar started getting these signals in late 2014, early 2015, and it predicted that the dollar should see sideways to down price action for the next year or two. We're seeing that in the West Texas Crude Index. We're getting these bottom events on a monthly scale. So even though it's taking time for this to develop in the crude oil market, the prediction is that crude oil should stay flat, so above 40, or rise to 60 or higher for a few years from this 2014 initial signal. Additionally, in this report, what is also attached is a breakdown of all the stocks in the S&P 500 by sector, and detailing each stock, how much the internal price wizard algorithm has the valuation for each specific stock. For example, how to read this is Apollo Group is in the consumer discretionary sector of the S&P 500. It's currently where it's trading, which isn't denoted here, but it's currently showing that given the publicly announced valuation metrics, so earnings, debt, any key accounting data points that are publicly distributed are used in this algorithm, and given its stance, this is almost 500% undervalued. Now, that doesn't mean that the valuation can't change over time, but the current reading of the valuation has this extremely undervalued. The opposite end of the spectrum is where you get a negative number. For example, Netflix is 82% overvalued given the fundamental metrics that it has reported to the accounting filings. So more specifically, we can zoom into the energy sector, and some of the more beaten down names that are extremely undervalued are WPX Energy. This is undervalued by 543% given its current price and its current valuation. And as we move down the list, these are names that are still undervalued, but less so than maybe some of these other names. So, for example, Diamond Offshore is about 100% undervalued. Valero Energy, very similar, 100% undervalued. Chevron, given its current trading, is about 60% undervalued. Exxon is only about 30. Some of these other names, Range Resources is only about 6% undervalued. Newfield, Kinder Morgan, they're a little bit overvalued. And some of these other names are still very overvalued, even though oil has been very weak. So Pioneer, Cabot Oil, and EQT are, respectfully 40% or more overvalued. So that's just a basic primer on how to read this list. Managers usually use this as an idea generating document going forward into the next couple months. And the last element of this document that is important to understand is these extreme Hurst signals on the right-hand column. Let me zoom in here a little bit so you can understand. These are just denoting those blue diamonds and those fuchsia triangles that we first saw on the weekly report over here. So we're just putting them in a tabular format. So how to read this is C is a compression, B is a bottom signal, and T is a top signal. The first number is the magnitude, so this is related to how many weeks going forward that this signal is still valid. I wouldn't worry too much about this right now. The rank is also the confidence in the signal. Obviously, a higher ranking number is more confident than a lower ranking number. So if you're starting to see anything that has like a 99 or 95, these are very, very confident signals. Like right here, this is a 99 rank. And then the last number is important because it tells you how many weeks ago did this signal actually trigger. So every week when I look at this report, I'm looking for zeros and ones because this means that signal is very fresh. So right now there's a bottom signal in Scripps Network Interactive. It's around 40% undervalued. So this is an example of a stock that actually has clearly a good valuation, and it has a timing signal that to enter some of the a long position in some of this stock could be a prudent trade. If we go down to the energy sector, we can probably see, and this is from last week's price action, so we can see that some of the more recent bottoming triggers are in Devon Energy. A lot of these are like 5 weeks old. Looks like they all kind of happen at the same time. There's nothing really pressing this week, so if anything pops up at the end of this week, you'll see a B and then a 0. Okay, that's it.